Okay, everybody, here we go. It's me, Gregory Mannarino. Friday, November 22nd, 2024. We made it through another week, at least so far. And we have to talk about a few things here in this lovely, of course, pre-market report. I would be concerned about a false flag event, status post, market close over the weekend. This is their usual MO. Wait till the market closes over a weekend. Let the market digest what happened. I'm not saying this is a lock. I'm saying this is what we need to look out for. We're seeing something here, at least with regard to the U.S. dollar. Let me show you what I'm talking about here. There's been quite a run-up in the relative strength of the dollar. This is what I'm talking about. This is clearly a sign of fear. There is some fear, not an overwhelming amount of fear by a long shot here. There's nothing going on here in the debt market. Generally, with a full-on fear trade, you see cash not only seeking safety, if you want to call it that, in the dollar, but you also see a knee-jerk into debt. And we're not seeing that. And the other thing you need to keep in mind is nothing, absolutely nothing, seems to be getting in the way of the irrational exuberance in this market. I mean, we don't get pullbacks, we don't get corrections anymore. It's quite an astonishing thing to see. I mean, look, the economic news has been abysmal, round after round after round. And what do you and I know? The worse the economic news gets, the higher the market's going to go. The disconnect is so extreme from any kind of reality. Well, what else would you expect in this kind of an environment, I guess? Anyway, this is kind of an interesting headline I want to talk to you about real quick. So they're talking about a drop in U.S. Treasury yields. The 10-year yield has come down a little bit, very little. I wouldn't say it's anything to shake a stick at here. But what I want you to see here is, again, look at the Eurozone activity, the data. My friends in the Eurozone, my friends around the world, we're being destroyed, okay? Eurozone data, miserable. Data here in the United States. I mean, come on, here's another one from this morning. Big retailers, discount retailers, yet again, Ross Stores sales disappointed. It's the same narrative that we just heard out of Target, which got decimated here. Cautious consumer, nice way of putting it, and a weak consumer. They're done. Consumers are done. The middle class, you know what I'm going to tell you. This is an extinction level event. And it's going to get made worse moving forward with the promises of lower rates. And of course, what the Federal Reserve is on track to do. But, hold that thought for a second. I want to show you something real quick. What have you and I been talking about, I don't know, for about a week? We have been saying, that it's going to be very difficult for the Fed to justify a rate cut next month. And what did we just hear? Well, this is this morning, this freaking ghouls thing creature. Oh, you know, we may have to slow the pace of rate cuts moving forward. This is going to infuriate Donald Trump, who has promised all of you lower rates, which is obviously the polar opposite of what you need. We don't need lower rates. We need much higher rates and, of course, a stronger currency. But again, you know, our illustrious, beautiful leaders here think we're too stupid to know what the grand plan is here. I want you to think about something else here real quick. Going back to central banks. What is the one thing? I'm going to ask you guys and girls a question. I'm going to answer the question, but I want you to think before I give you the answer. What's the one thing that central banks fear above all others? Think about that for a second. What do central banks fear above all others? Some of you got it right. And what am I talking about? Deflation. Central banks, as you can see, will not allow. Well, let's put that into perspective. When you hear the word inflation, what we're really talking about is loss of purchasing power of the currency. When you hear deflation, what you're really talking about is a strengthening of the currency. Again, people don't even understand that at its most basic level here. Now, what do we know with regard to, let's say, the Federal Reserve? And every central bank, they have an inflation target. It's an incredible thing. They want to hit a certain rate of inflation. We're supposed to accept that. For the Federal Reserve, it's incredible, really. They have a 2% inflation target. In other words, they want to inflate at an annual rate of 2%. What does that mean? Every year, if the Fed were to hit its 2% target, okay, let's just throw this out here for fun. If the Fed were to hit its 2% target here, that means every year the dollar, in this case, would lose 2% of its purchasing power. Then the next year, another 2%. The next year, another 2%. The next year, another 2%. This is how the central banks keep their power and allow themselves to inflate by devaluing the currency, by creating inflation. But you're not supposed to know that. And again, they work with their respective leaders, wherever they may be around the world, to make sure that that mechanism is in place to make the central banks, of course, achieve their goals, to be the lenders and buyers of last resort, to own it all. It's an astonishing thing, but no one's going to explain this to you. It's an incredible thing. Again, going back to this, with the Federal Reserve and the situation here, again, in the Eurozone, abysmal economic news over there, inflation continuing to rise, same thing here in the United States. It's going to be very difficult for the Fed to justify this before the public, that we need to continue to cut rates. I mean, it's obviously the wrong thing. If any central bank people, I'm going to tell you again, we could have already stopped inflation in its tracks, I mean, dead on. How would we do that? Contract the money supply. Central banks will not allow that to happen. They will balloon and balloon and balloon the money supply as to devalue the currency here. But again, their greatest fear is deflation, because then it would help you, of course. Your currency would all of a sudden gain purchasing power. They can't allow that. You must suffer. They must create more easy money. They must pump more easy money into the system, devalue the currency again, because the elite, the super rich, they get access to the currency first before it's massively devalued and it gets to you as it makes its way through the economy. So the mechanism here is always the same. Push wealth up to the 1% and 2%ers, the elite. You understand? There's a whole play, of course, you know, the nonsense. Oh, yeah, the last few presidents have done more to help the elite, the 1% and 2%ers, than every president before them combined, going back to George Washington. More millionaires and billionaires have been created under the last three, soon to be, again, the same creature that we had last time as well. Helped the Fed inflate more than any other president, as you know. And we're going to get the same thing again. Don't be misled here. That's where we're going here. There's just no way to escape it. And I think we're pretty much on the same page. Anyway, so I want to show you a few other things here. First of all, gold and silver this morning, catching a bit. Commodities are where you need to be. Of course, you need some kind of cryptocurrency. I say, why I say some kind is because I keep getting, oh, Greg, why are you telling people Bitcoin? Why are you telling people Bitcoin? Because Bitcoin is the mommy. Have you seen the performance of Bitcoin? I'm not saying. I mean, look, I think you should be adding a basket of cryptocurrencies to your portfolio right now, especially since we got the Bitcoin president. We got a president who's promised you, me, and the crypto whales to make the United States the crypto capital of the world. No mention whatsoever of a constitutional money system. No mention whatsoever of adding gold to the U.S. strategic reserves. In fact, they're even talking about selling gold. One of Trump's cohorts, I forget its name, Loomis, talking about, let's sell the gold. Let's sell U.S. gold and buy cryptocurrency. You got to be kidding me. It's madness on a grand scale. We need to be vastly adding gold, but it won't happen. If we were to add gold, you all know what I'm about to say, to the U.S. strategic reserves, it would put a roadblock right in front of the Federal Reserve. It will not be allowed to happen. The Federal Reserve will be allowed to fulfill its goal. Again, this is over a century in the making. Make no mistake, when a president or a prospective president is vetted by Wall Street, and that of course means the Federal Reserve, they're sat down before a panel of people. Again, this is behind closed doors. There's no minutes. There's no pictures. There's no anything. But this is what happens before they go to you. Every presidential selectee does that. They want to, again, lay out the agenda, see how they're going to play, and that presidential selectee is the one that is chosen by them, not you, to sit behind the Resolute desk as the mouthpiece, as the leader, as the great deceiver behind the Resolute desk. Understand that. That's all we have. That's all we get is deceiver after deceiver after deceiver, and all they do is make sure wealth gets pushed right up to the 1% and 2%ers. Make sense to you? Open your eyes if you don't believe that's what's going on, because the last 3 presidents have done that more so than any other. Anyway, I want to show you something else here. This is the MMRI from this morning. Do you notice the difference in this slope versus this slope? This is where we are now, the pace at which we've seen the sell-off here in the debt. It's been pretty extraordinary. Now, the reason why I'm saying you and I need to be watching out for a false flag event is I don't think this is going to continue. I really don't. A false flag, let's say over the weekend, of course, as their MO, after the market closes, whatever, we see something big happen, either Ukraine, Russia, Middle East. You'll see a bigger knee-jerk reaction of cash into the debt market, and that would be enough maybe to start a downtrend. I don't think this is going to continue. I don't think they're done. I don't think they're done here, people. I really don't. There's not enough dependency on the system yet. People haven't been destroyed enough, despite the fact, again, that big retailers, let me just show you again here, all with the same narrative here. Consumer is cautious. Consumer is weak. Again, what do we got? We got, again, look this up for yourself. Loan defaults across the board are skyrocketing. You're not allowed to know this stuff. The banks, again, are in so much trouble here. But I've been telling you to buy the banks. You know that. Again, this mechanism, which is now in place with deregulating the banks, merging that with cryptocurrencies, regardless of the black hole balance sheets in these banks, makes them pretty desirable to own here. Honestly, there's going to be a moment of reckoning. It just isn't yet. So we're going to ride the wave here. Again, the deregulation of banks, the merging of crypto with the banks is very positive for both banks and cryptocurrency as we're bridged into the new system. You all know that we are being bridged. That's Trump's job. That's why he was chosen for this position. He's also an advocate of negative rates, which means you lose. And central banks win, more cash pushed up to the 1% and 2%ers. Watch exactly how this is going to play out, as I have said. This is how it's going to work here. Regardless of the propaganda that you're being fist-fed in every orifice that you may have, the bottom line is the trajectory for where we are going is exactly as we have outlined. Nothing has changed. We are marching into a liquidity crisis. Cash is drying up. They must find another avenue to pull cash into the now. That means either an expansion of war vastly, some other false flag, scamdemic, warp speed, whatever it has to be, there's going to be something thrown at you. They're not done eliminating us. We're being thrust back into a neo-feudalism kind of society on a worldwide scale, and it's not going to change. Just get hip to that. And that means that you and I don't change a damn thing. We're continuing our strategy, betting against the debt, becoming our own central banks, hoarding commodities, silver, of course. People, you need exposure to crypto here, even just a little bit. I'm telling you right now, which one? Bitcoin. Why? Trump's the Bitcoin president. That's what he said. And he is going to make the United States the crypto capital of the world, not the constitutional money capital of the world. That cannot be allowed, because that would again put a roadblock in front of the Federal Reserve's plan. And again, every manner of deception, blame is going to be pointed at wherever they got, but not at the Federal Reserve. I think there's going to be a battle set up here between the Federal Reserve. It's going to be fake, of course, between the Federal Reserve and Trump moving forward. And it's all theater. You have to understand. The Fed is really stuck, in my opinion here, with regard to cutting rates moving forward aggressively, although that's what they want to do. Trump has promised you low rates, which is obviously what we don't need. So there's going to be this setup here. Again, Trump was selected because he's an advocate of negative rates. and zero rates, which means obviously massive currency destruction, which is what the Fed wants anyway. So they're going to set up this little game. Mark my words on this. They're going to set up a game. Oh, the Fed isn't cutting rates aggressively. Trump is going to start calling them boneheads or whatever the name he can come up with. Oh, the Fed should be cutting rates more aggressively here. And all this means is, of course, the currency devaluation aspect of artificially suppressing rates and artificially suppressed rates themselves are massively positive for the stock market. A wrecking ball for the economy, but they're going to set up this little charade for you. You can already see the media here. There's going to be a showdown between Trump and the Federal Reserve because the Fed may not be cutting rates as aggressively moving forward, but that's because they're really pushed in a bad spot. But of course, how it's going to play out is the Fed will be cutting rates, maybe at a slower pace, as Trump throws a tantrum that they're not cutting fast enough, which means you're not being wiped out fast enough. You understand? The game is you lose unless you play the way we are. Stay long the stock market, gain exposure to commodities, cryptocurrency. You know what to do with it, people. Come on, it's too simple. It actually is. It's way too easy here in this kind of an environment. But, like I said, we're going to raise our awareness, pay attention to what's going on here. Watch this charade, the games that they're gonna start to play on us. Some people are gonna buy it. You have to understand. Trump is not being allowed to do what he wants to do. He's not a king, but it's a game. Again, the Fed wants to devalue the currency. The Fed wants to suppress rates even further. But again, the setup here is they're not going to do it fast enough because Trump has promised you lower rates. He can't do it. No president has that power. You understand that? Most people have no idea. They think the president can just do it by decree. No, presidents don't have a printing press. They have no ability to devalue the currency. They can certainly work with the central bank to make it happen. And I think we're going to see that on a massive scale moving forward. Period. The end. It's pretty freaking obvious. Isn't it obvious to you too? All right, guys and girls, I'm going to let you go here. So we'll talk more about this later on, but I would be looking for a possible event over the weekend here to maybe push cash into the perceived safety of debt that might start a downward trajectory with regard to the MMRI. Doesn't matter anyway. It looks like every single freaking thing that's thrown at this market doesn't matter. Higher, 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 higher. The promise of easy money, the market knows it's getting it, has made market participants drunk, high, stoned, I don't know, whatever you. I mean, look, the market multiples are just unbelievable at this point that we're seeing. It's not going to stop until it does. And there's a moment of reckoning coming, people. It's going to be just freaking epic, man. Just be ready for it and stockpile non-perishable stuff, people. You must do this in this environment. We have to be ready from every freaking angle. You know that. Anyway, that's it, guys and girls. Love you all from the heart. I mean that. Thanks for being here. Please share the video. Get it out there. Those thumbs up are valuable. Let the algorithms pick this stuff up, okay? I will see all of you later, 4 or 5 p.m. Eastern for the live stream. I'm looking forward to that. Have some questions ready for me. No matter what you want to ask, it's all good, man. This is our thing. This is our thing, okay? And we're stronger together. Always. Love you. See you later.